Hello, this is Angela Payne, your professor for Accounting 1. In this chapter, chapter 7, we will deal with sales and how to journalize sales, sales tax payable, and returns and allowances. So we'll give you a quick overview of chapter 7. When a company makes a sale, it will affect the sales account. Remember, sales is a revenue category or how a company earns its income or revenue. If sales tax is involved in the business transaction, it will also affect the sales tax payable account, would have to be journalized. When businesses charge taxes on behalf of taxing authorities such as the IRS or the state, then that is a liability, meaning that the business is liable and held accountable for collecting those taxes to submit to the proper taxing authorities, unless the buyer is tax exempt, such as a nonprofit organization. If a customer returns an item, is given a refund, or is given an allowance or discount, then the sales returns and allowances account, which has a debit balance, will be part of your journal entry. Notice in the graph below, if sales returns and allowances account, you will be journalizing that in this chapter 7. If you look at the chart, we've kind of broken it down for you in situations where you would need to use the sales returns and allowances account. Now, if you recall, sales or revenue would normally have a credit balance. But if someone returns something, well, the opposite of credit balance for sales, the opposite would be to debit it, because sales returns and allowances, that means that sale basically got reversed. So it would be debited instead of credited. Journalize the sales returns allowances if a customer returns an item. We've all had a situation where we had to return an item because we didn't like it, or it didn't fit right, or whatever the case was. Another example is you will journalize the sales returns and allowances account if a customer is given an allowance or discount. For example, someone may buy a desk for their office, and let's say the desk has a scratch on the back, and obviously the scratch would not make the desk not usable. However, the business may give you a very good discount to sell the desk as is, and most people would take advantage of that to get a discount because the desk is still usable. So that would be an example of being given an allowance or discount. And last but not least, another reason that you will journalize the sales returns and allowances is if a customer is given a refund. And we've all probably been in that situation as well, where we've given a refund for something because we didn't like it, or there was another problem with the item that you purchased. So again, in this chapter, you will use, anytime there's a returns or allowance or discount, it will be journalized in one account called sales returns and allowances account. One other note that I'd like to share: in previous chapters, we've dealt with customers paying with cash, so that involved the cash account, of course. However, in this chapter, we will also deal with when a customer is allowed to buy something on credit. Then that will involve the accounts receivable account, sometimes abbreviated AR. So with the accounts receivable account, which of course is an asset account, the business expects to receive payment later for the items purchased on credit. Therefore, that's considered an asset, and that payment would be expected to be received in the future. So this is a quick overview of chapter 7 that deals with sales, sales tax payable, the sales account, sales allowances and returns, and also accounts receivable. We hope this has helped you, and I hope that you have a great week.